You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. And Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I got the chat open. Aloha. Eddie, hey buddy, Marty, James, Janet, Dale, Chuck, Navi, thank you, John, Saul, thank you everybody for joining. Everyone gets on here a little bit early. We're always saying good morning in the chat. Market is moving today. Market is moving a ton today. Why is the market moving? I'll tell you, bonds. Look at the TLT. TLT is straight up. Trump tells the Federal Reserve, you better get those interest rates down. Is that going to work? Well, the market seems to think it's working. Interest rates are going down. Prices are going higher, but it's a little artificial because there's a lot of pressure from the president to get those rates down. I think that's why the market is getting smushed today. Let's talk about it, but we always say the creative trader wins. Find the reasons why the market's moving. When that settles down, the market will turn. When bonds trade off, the market will trade higher. Let's go to the screen. All right, a bunch of things to cover, but the first thing that I want to cover is I want to show you what's going on with these bonds. And we can just look at the TLT. That's what the TLT looks like. Again, I have my little expected move charts on here. Here's the TLT. The TLT went from just 12 days ago, was trading 86, last trade 92. This huge move in the bonds is what's spiking the VIX, in my very, very strong opinion. Now, if I look at all the VIX indices, actually, you just do it on here. If we look at all the VIX indices, it looks like that. Here they all are. VIX 90 is the thick red one. Volatility is going higher. If I take off the VIX 1 day, because the 1 day is just a lot of noise. Right here, we have VIX 90, the VIN, the VIX, the VIF. Okay, and they're all going to be right here as well. Look at what we have here. All in the 20s. Okay, we have a extremely, not only is it high, it's also very, very, very flat. So the VIX, the risk measurements, 9 days, 21, 6 months, 2178, 1 year, 2189. There's as much risk in the market right now as there is if you go a full year out. Be very, very careful. I want you to watch those bonds. As long as bonds are trading higher, and you can look at the TLT, the market will stay down. That's what I believe for today, at least. Really cool chart between Walmart and Amazon. Just putting this up here for fun. Going back 10 years, Walmart steady as she goes. Amazon finally takes over quarterly revenue numbers from Walmart. Ooh, probably turn my ringer off going forward. And here's what we look like in a chart. Just going back to 2022, Amazon is the light blue. Walmart, white. Walmart's behaving really well, but Amazon is pretty inexpensive relative to Walmart. Really cool chart. This is something that we've been showing you throughout the week. Whenever we're looking at the markets, we're not looking at just the QQQs. We are always looking relative to one another. I think that traders, investors get in trouble because they only look at the NASDAQ or they only look at the S&Ps. Russell, IWM, futures / RTY, IWM is very, very inexpensive relative to the rest. But NASDAQ was expensive. NASDAQ got absolutely crushed. Now we're waiting and see. I think what you need to watch for a turn in the market is this. Here's what I'm watching for a turn in this market. And we want to see that this week. It's going to go a little 5-day, 10-minute. Here it is. You watch those bonds, guys. I'm telling you. I've seen this movie before. And this will happen. I think this is going to be a good catalyst for this week. TLT. Here is the behavior. Okay, look at Friday. Friday, we spike up. Market got shellacked, right? Nothing going on. Friday, rally. Not much yesterday. And today, bonds are breaking out. As long as bonds stay strong, the market is going to be scared. This is the trade for this week. Watch these TLTs. If TLT gets back under 91, this market is a buy, and I am going to suggest the IWM in our community. Watch that 91 level in the TLT. I'm telling you, I've seen this movie before. And what do I mean when I've seen this movie before? Just one name breaking out and bonds breaking out. I don't like that the president told the Fed to get rates lower and that the market is reacting. Okay? I like free markets. I think that things should happen naturally. I think this kind of pressure is forcing bonds higher and scaring the community. With that being said, we talked about how do we get this market to rally. What happens if those TLTs don't sell off? What do we do then? Here's the Russell. IWM, it's the same thing. IWM and RTY are the same thing. 100 and 200 period moving average is 2036. Still a ways to go. Why do the moving averages start right here? That's because /RTY is a newer contract that started in 2018. So this is when we needed 100 days or 200 days to get those moving averages. What I wanted to point out is look at this. 2021. Looks kind of the same, right? That concerns me a little bit. Because it looks the same, you got to watch out for these levels right here. Obviously, a world's away at 2300, but very cool. These really do look very, very similar. And so that's something to watch out for. Just something I want to share because I thought that was pretty darn cool. VIX trades up to its expected move. It's through there a little bit. It stays within its expected move 76% of the time. We'll see if it trades back under. I want to get the chat up, see if there's any questions. Chat, what's up, guys? Madeline, thank you for joining. Eddie, flight to quality. Flight to quality in the bonds running out of the market. That's kind of concerning. But that really is, it's like what's going on different today than what was going on 2 weeks ago, 3 weeks ago, 4 weeks ago. The difference today is that TLT bonds are making a really, really big move. The next chart, I got a trade to share for you. Once in a while, we share some trades in our promotional portfolio. This trade, just to share with everybody, I think it's a pretty cool name. Let me just separate these things. Okay, let's do it this way. I'm going to show you the unusual option activity first, and then after that, I'll open up. Okay, so February 24th is our unusual option activity tool, and we found some unusual option activity tool. We found some unusual option activity and a ticker RADNet, RDNT. Now, I really do like finding tickers that I'm not so familiar with. RDNT, I never even heard of this thing. This pops up on our advanced notice tool. Okay, then we start looking at it a little bit deeper. RDNT, here, June, 116 days. This is where we see the unusual option activity. Okay, so we have June, 116 days. So we have lots and lots of time. And look at this. 5,000 options trade. Now they're pretty expensive. The reason why I'm not sharing this with our all access group is we don't really look for trades that are half a year out, but someone is definitely putting on a bullish position in RDNT. And if we pull up the live options right now, if I can find them. If we pull up the live options right now, we don't want to be in March. And let's look at the volume and an open interest too, because you notice in March, like, look, there's not that much going on, right? So March, there's not that much going on. April, 33, 200, not really that much going on. But all of a sudden, when you get out to June, like, oh, somebody's got an axe to grind. Somebody cares. Somebody really, really cares, right? So just thinking this through common sense wise, there's no activity at all on this name. It only trades 185,000 right now. These are really, really big trades. So a trader could consider maybe joining the 70 calls, maybe joining the 75 calls. I would work a limit order, maybe mid-market on these 75, 220 bid, something like that. Just seems like a really cool trade. GDXJ. Before I moved on, fuck no. I mean, I'm sorry to curse. No. So RDNT, Demetrius says, has earnings coming up. We want earnings. We want that movement. So if anybody's considering this trade, earnings for long option holders are a huge benefit. Okay. And then a couple of questions on here talking about GDXJ. GDXJ, we have an open position, so this is not something that I can really talk about. But GDXJ, we'll talk about trade management in our Discord community. Well, what I'm going to do now is this morning we shared a trade in our advanced notice community. And so now I'm going to move on to our all access portion and go over the exact trade that we filmed in advanced notice. Everybody in advanced notice, this part will be clipped and put into your Discord. As we switch to all access, guys, oh, wait, I'm going to answer Janet's question before I leave. Janet, in reaction to the chart you showed earlier, maybe in for a bigger dip, any advice for stocks we have been holding long term? In general, I know time to trim the winners in portfolio. So, Janet, I don't know exactly what you've been holding long term. Today is the day to get on prints. Today, we want to build positions. This is big movement. We want to get on prints. The only trades that take off is if you're long puts. But there's a little bit of a sucker's play because too often traders will have 6 positions as an example. And out of those 6 positions, they're long 5 calls that are all doing poorly. And they're long 1 put. Their 1 put is up like 30%. So they're so excited that they take off their 1 put. And then they're just holding the 5 long calls. What's important for option traders or for any traders, you want a balance. You want 6 positions, 3 calls, 3 puts. Maybe 4 calls, 2 puts. Maybe if you're bearish, 4 puts and 2 calls. That's really, really important for position management. having a balance between calls and puts, long volatility and short volatility. And a little cheat sheet for that is whenever you buy options, you buy a call, you buy a put, you're long volatility. When you're long a stock, we actually think about that as being short volatility. Why? Because if you're long Microsoft and Microsoft goes higher, volatility is going lower. There's no risk to the upside. So traders, when you hold a stock position, think of that like you're short volatility. You're going to get rewarded when risk comes out of the market. When you're long puts, when you're long options, you're long volatility. And that's something that we teach in Masters in Trading. If you're looking to learn more, guys, we have always got a bunch of promotions going on. We'll have the number across the screen. Feel free to call, ask about our advanced notice, our all access, or any of our programs. Thanks so much for watching. Everybody in all access, hang on, we'll be right back.